Morning, Lucy.
Good morning.
I believe we had just received an apologies from Andrew Bradley, as he's in America right now, and he was just going to say an introduction and a thank you to all directors participating, and he's asked me to do so, and then he was going to let me start the presentation. So he's asked me to just thank everybody that is attending. And as it is 10 o'clock, I will start with the pleasure of starting with the introductions and the general overview. I'm asking Lucy to please coordinate the slide shows. If you can please go ahead, Lucy. We have the pleasure of introducing today and presenting the half-year results of RDC. They are unaudited. I'm joined here by a number of our directors, and thank you all for making the time to join us. And the management team, CEO Jacopo Pari is there. Our CEOs are there too, country managers, and a number of other support staff are there. I'm sure you will see them as we go along, and they will be part of the presentation. So I'm just going to start with a general overview. The company has not really changed any country in which it works. It's still operating in 7 countries, 64 properties. In the last 6 months, we've sold a few other properties, as you will hear going forward. The portfolio continues performing well, and in fact, it's now giving us some opportunity for some growth and some subsequent new projects, and we will present those to you. The diversified portfolio, which was part of our strategy, is working very well and allowing us to actually outperform our expectation, as we didn't expect Botswana to go through a difficult time as it is going right now. And our portfolio's revenue are 23% in US dollar and in euros and 63% in ZAR. And therefore, this puts us in a very strong position for the future and allows us to look into new opportunities in those regions. The value system remains the same. We are reviewing with our non-executive directors and with independent directors the strategy. This is a part of a process that will happen at the end of the year. The executives have had a strategy meeting, and we've had a week of deliberations, and we've had the opportunity to meet some of the fund managers, to meet in Gaborone all the different executives. And I'm pleased to say that that week has been very fruitful. The purpose of the company remains to grow shareholders' value by owning and managing strategic property assets that enrich stakeholders and very much anchored to our communities. We believe that we are the leading real estate company in Botswana, known for its international reach, expertise, innovation, sustainability, integrity, and a very much of a client-centric approach. We are reviewing the midterm goals. For the time being, they remain what has been always stated as our objective: the growth of NAV of 3 to 5% above CPI, reduce loan to values to a maximum of 40%, which we are working towards. The revenues, increasing the revenues in stronger currencies, and increasing the distribution. And that is a matrix on which the company has really, in the last 3 years, shown that that's the direction we are going. So I now leave it to Jacopo, our CEO, to actually go through the next slide, which is the half year at a glance. Thanks, Jacopo.
Thank you very much, Guido, and good morning, everybody. From the strategic medium to long-term goals, we have devised this slide to show, even under the current circumstances, what our responses are and what, based on the strategy, the future outlook will look like. As mentioned by Guido, Botswana has been hit by continued subdued sales in diamond, affecting the fiscal and the economy at large. Clearly, this has been a challenge for us. Mentioned it's a small market and has been more than countered by the strength in other markets, especially Croatia, and the resilience and somewhat an uptick of South Africa. Locally, the bond market wasn't really a sustainable market, but this hasn't prevented us from renewing all our facilities. And the reality is that the currency has depreciated, but this has come to us very positively. We have an effective currency hedge, and we have interest rates swaps. So basically, even our debt is kind of secure, completely de-risked. So the de-risking is not only through geographical diversification, but also through financial instruments. We have continued selling our properties and growing our relationship with our partners, which has helped us, partners, lenders, and fund managers, which has helped us in shaping the strategy going forward and clearly optimizing our debt. So all this said, the current outlook, it's somewhat for us positive. We have sold properties, as we said. We have delivered on that one. We can go to the next slide. We had a stock of properties, which accounts for one property only in our account, which is a residential, and we have sold 10. To be noted that when we bought this portfolio, that property was in these residential units were selling at around 45,000 rand per square meter. They are currently selling north of 65,000 square meter, showing our hands-on approach and direct marketing efforts are working. This of global changes and the FX strain has really generated to us a very good return. We have been discussing this one for the past many years, the need of diversification, and now it's starting to bear fruits. On our euro, hard currency denominated, accounting for 23%, and roughly the balance would be in ZAR and Rand. We have seen 66 million of additional comprehensive income, which is not a small feat. It equates to a 4.6% annualized return on equity. So all these efforts of sales have reduced very close to our target, our loan to value, and but not only under very difficult circumstances, at least locally, not the like in Croatia, which are very, very positive, and so are in South Africa. We have managed to reduce our average cost of debt, and so it shows that not only we are selling, but also we are refinancing. So the portfolio strength is recognized by our lenders. You will note that over this period, 6 months, we have renewed 43,800 square meters, another quite important accomplishment, showing the strength of the portfolio across all our region, but Croatia, which is and remains fully let. We are growing, as said, our distribution, and this coupled with the bonus share issue, which has delivered basically the fair value back to the shareholders, amounts on a flat share price, linked unit price, at global 25% return to our investment. So on all the four metrics, we are working on them. On some, such as the LTV, we have succeeded. Others, we are really on the good, a very good trajectory. Thank you. Next slide. Over to you, Gary.
Yeah, thank you, Jacopo, and good morning to everybody. I'll deal with the next few slides. And this really speaks to our ESG program. I mean, I think RDC is considered to be a leader amongst its peers in Botswana's real estate sector, both in integration and in disclosure. There's, of course, an increasing focus on ESG through the BSE regulations, through market demand for green buildings, and, of course, our tenant and client expectations. RDC has used the Sustainable Development Goals adopted by the United Nations member states as a framework for defining our long-term objectives and our areas of materiality. And I guess there's no question that ESG has become non-negotiable. As part of the global community, we must do our bit to respond to the challenges to our environment that have been brought about by climate change. In addition to this, deeply embedded in our values is also the imperative to support and uplift communities within which we operate and work. Socioeconomic reform is the greatest priority in Africa. And in a world where compromised by ethical failures, our uncompromising standard of corporate governance reassures investors and stakeholders. In addition to that, ESG is also simply good business. It's worth over $50 trillion globally. And as green premiums turn to brown discounts, those who do not get on board will be left behind. Next slide. Thanks. So the focus areas include water monitoring and security, waste management, energy efficiency and performance, and green building certification. It's been gratifying to see an increasing number of our properties benefiting from the generation of clean energy as we roll out our solar program across the portfolio through our power purchase agreements with our sustainability partner. Our current focus is in fact in Botswana, where we are developing sustainability protocols for our leisure hospitality assets. The rebuild of Chobe Marina Lodge will set a new standard in this regard, and we're introducing solar at David Livingstone Safari Lodge in order to reduce our reliance on the Zambian grid. As new opportunities arise in the sector, we will ensure that sustainable solutions are a key part of that strategy. I think we can flip over. Here's a bit on our performance to date. In total, 8 new PV systems have been commissioned since this time last year, which brings our total to 12. This is an effective increase in our kilowatt peak capacity of 573%. And we currently have a capacity of 1.6 megawatts, which is set to more than double in the next year. So that's a step change in our approach to clean and efficient energy. Financial savings in the first half of this year amount to R1 million. And bear in mind that some of our larger systems have only just been commissioned in the last month or so. So that figure will grow quite substantially the next time we report to you. And this has already offset some 600 tons of carbon emissions. I think I'll just leave it at that. You can move on. And what I would like to do is have the pleasure of introducing a colleague of mine, Nadine Africa, who is overseeing our corporate social investment program. Over to you, Nadine.
Thanks, Gary. Good morning, everyone. I'm Nadine Africa. I'm the marketing manager, and I'll be taking you through the social section of the presentation. At RDC, we are committed to making a difference and uplifting communities through our corporate social investment, or otherwise known as CSI, projects and programs. Our CSI projects focus on 5 key areas, specifically arts, culture and heritage programs, education and youth development, community empowerment projects, health and wellness initiatives, and food security and feeding initiatives. We aim to uplift our communities in which we operate, to be inclusive, compassionate, and create lasting value across our regions. We engage with communities and carefully choose initiatives that reflect RDC's values, which also include empathy, accountability, and inclusiveness while addressing real community needs. Our projects connect in one or more ways to the UN Sustainable Development Goals, ensuring our support is meaningful, sustainable, and reflective of our commitment to responsible and social conscious investment. Moving through to our arts and culture programs, we focused on two key initiatives. Firstly, the Radisson Red Rosebank Emerging Artist Initiative, which allows the hotel's common area to become a living art space and showcasing African artists' work. Each year, we feature a new artist, and this year we are featuring the work of Sam Nklingetwa, a prominent South African artist who is represented by the Goodman Gallery, whose art captures everyday life and South African culture. An art unveiling event was held in April, giving Sam a platform to share his work and showcase it to new audiences, to the media, and celebrate African art. The second one was the Cape Town Investec Art Fair, where RDC sponsors the Art Collection Award to support African artists and creative galleries. This year, through the Art Collection Award, we acquired a piece by Ibrahim Khattab, represented by Eclectica Contemporary, whose work celebrates diversity, inclusivity, and heritage, which all aligns with RDC. We are also looking forward to continuing our support for African art at next year's Cape Town Investec Art Fair, which will take place in February. Through these projects, we create opportunities for African artists, but we also enrich our communities by preserving and celebrating African culture. Under our education and youth development projects, we continue to support Ngwapa Primary School and Boitumelo Primary School, awarding the top students for their hard work and achievements. We supported the schools through the donation of certificates and monetary awards for the prize givings, but we also made a donation of 2 computers and a printer to improve the school's administration at Ngwapa Primary School. Moving on to the next slide. Under the community empowerment projects, in June, we donated 50,000 pula to the private sector disaster relief fund, helping people affected by the Gaborone floods, which I believe took place in February. Under the health and wellness initiatives, we made a donation of repurposed linen to the SOS Children's Village in Johannesburg, and we also supported a blood donation drive at Cape Quarter. This was done through the Western Cape Blood Service, providing an exhibition space to them at no cost to host the drive. This has also made it easier for the community to access the blood drive and also contribute to a meaningful cause. Through our feeding initiatives as part of Mandela Day, our Cape Town staff prepared 320 sandwiches and 500 cups of soup, which was served to the Cape Flats community. At the end of the year, we are looking forward to rolling out further initiatives over the festive season through the donation of gifts to the beneficiaries, and we'll also be hosting a carols by candlelight at Massa Center. So we'd just like to bring joy to the communities at the end of the year. Thank you.
Right. Who is speaking on this?
I think, Guido, you're on mute.
Yeah, I'm really sorry. You can see my age. I forget to unmute myself. Sorry about that. My colleagues spoke about the environment, the social, and on the corporate governance point of view, we've continued to uphold the highest possible standards. And as you know, during the last 6 months, we've had a few retirements from our board. I'd like to take the opportunity to again thank for their support during all these years, both Giorgio Giachetti and Kate Mapache. They've been a great support for all the growth of the company over the years. And we welcomed on the board Mr. Piso Mganga, and Mrs. Lorato Moselatlagnane as new members of the board. They have already participated to 2 of our board meetings, chaired by Andrew Bradley, and I think they've been inducted into the company and understanding the dynamics of what we are trying to achieve and the strategy of the business. So this new 2 appointments has allowed us to achieve the goal of having 50% of ladies on the board. 70% of the board are non-executive members, and 86% are independent of those. So I think that just shows our commitment to corporate governance. I guess in a year and months that saw the report of an independent review of our procedures during the corporate action, we were cleared of good corporate governance over the whole year, and this was through a very thorough investigation. So we are really pleased that we are vindicated in our strong obedience to corporate governance and to our ethical standards. I presume I will now leave the floor to the finance team, and I will leave Avi
Thank you.
to
Thank you, Guido and
present
team.
the finance side.
Thank you, Guido and team. A very good morning to all in attendance. By way of short introduction, my name is Avi, and I do represent the finance business unit of the RDC Properties Group. It is with great pleasure that I present to you our group's interim results for the period ended 30th June 2025. We believe the results reflect solid performance underpinned by disciplined portfolio management, prudent capital allocation, and the benefits of a diversified asset base. On this slide, I present to you the key financial highlights for the period. Many of these were spoken to by my team already, but I think they deserve equal prominence, and I will go through them. The first one, our investment portfolio, which remains the largest on the BSC property sector, now sitting at 6 billion pula, has increased by 2% on a period-by-period basis. We've also consistently reduced our LTV, loan to value, in line with our strategy, which now stands at a 41.4% rate, down from the prior period, 43.2%. With our solid performance for the period, the group was able to grow our net asset value attributable to shareholders by 10% to 2.77 billion pula. Profit before tax and after interest showed strong growth of 21% versus the prior period. This in turn has translated to a 31% increase in the earnings per share metric, which is now at 4.65 thebe per linked unit. With our strong performance for the period and robust cash position, we were able to successfully increase our interim distribution by a whopping 91% when compared to the previous period. I'm pleased to present that the interim distribution is now 42 million pula. Can we move on to the next slide, Lucy? Okay, moving on to the next slide, where our detailed statement of comprehensive income is shown. From our income statement, our improved earnings for the period can be attributed to 3 main factors. The first one, whilst we had numerous properties sold in the prior period, the strength of our core diversified portfolio is shown by the consistent improvement to net property income. If you look at the graph to the right, you will consistently see that upward trend in net property income. Net property income for this period was 3% higher to the prior period, and this is whilst taking into account about 5 or 6 properties that were sold in the prior period. Number 2, in line with our group strategy of reducing LTV, and I think my colleague Jacopo alluded to it, our more important task is also reducing the overall cost to debt. We note that the finance cost reduced by approximately 7 million pula when compared to the prior period. This is a 6% reduction. Lastly, core to our group and true to our competitive advantage is our diversified portfolio, particularly being diversified in hard and stable currency environments. This embedded trait of our portfolio translated into financial gains for the period. If you refer to the line below the profit line, which is the exchange gains made on the translation of foreign operations, you would see a 65.5 million pula gain for the period. This stemmed mainly from the pula weakening significantly against the hard currency euro and a stable currency ZAR, where majority of our portfolio lies. It is through these factors and as a result of these factors, we are pleased to note that our total comprehensive income for the period ended 30th June 2025 is 112 million pula, which represents 129% more than the prior period comparative. Thank you, Lucy. You can move on to the next slide. From a balance sheet perspective, our financial position remains resilient, with the portfolio value and total assets base both growing. It is important to note that we do not perform property valuations at half year or at the interim phase. However, current market conditions in South Africa and Croatia are showing signs of growth, which should come through in our year-end results. As alluded to earlier, our LTV has improved over the period to 41.4%. Post-June 2025, we sold and transferred 2 properties which were held for sale at their fair values, representing the carrying amount. This is expected to further improve our LTV as we approach year-end. Due to the strategic and well-timed treasury management, we've also been able to reduce our overall cost of debt to the group from 8.84% in the prior period to 8.27%. This in turn improves our profitability and will position us to improve distributions going forward. Lastly, as a note on our debt expiry profile, we've been able to successfully and cost-effectively refinance our debt instruments that were maturing in the current period. Thank you. Let's see if we can move over to the next slide. Thank you. And just as a mention of a significant post-period event, our group effectively executed the bonus share issue towards the latter part of July in 2025. So in that bonus issue, our group issued 1 bonus unit for every 4 units held by shareholders. And what this represents in an arguably illiquid stock market is this is key to returning equity and value to our shareholders. The impact of this to a shareholder was 3 parts. 1, an immediate increase in shareholding without a dilution of shares. Accordingly, shareholders would receive the same amount of distribution before and after distribution is declared. As the share price has not changed, but the market capitalization has increased, the value of the holding held by each shareholder is increased. And this, according to our bonus share issue, is 25% return to a shareholder. Lastly, total net asset value did not change. However, net asset value per share reduces, and this closes the gap between the share price and the net asset value per share, which now our discount to NAV is only 22%. I think the bonus share issue, to reiterate, really enforces confidence in RDC's growth and is part of the group's shareholder value creation strategy. Thank you. I think the next slides would be on Gary again.
Yeah, thanks. A lot of what I'll mention has already been touched on, but let me just go through it. So we've got, as it currently stands, a pretty well-diversified portfolio of 64 assets, which is spread across the regions we've already mentioned: Botswana, South Africa, Croatia, Mozambique, Madagascar, Zambia, and the US. And obviously, this allows us to benefit from the income and asset streams denominated in hard currency, as we've mentioned. And it creates a natural currency hedge because income, expenses, and finance costs, more importantly, are denominated in the functional currency of the asset. As illustrated in the graphs, the group's exposure by revenue to hard currency in Croatia has increased from 16% to 18%. The portfolio, as you've heard, enjoys a 0 vacancy and strong demand. And this is organic growth because we haven't grown by acquisition there. And it's testimony, I think, to our investment in hard currency assets. Since, in fact, the acquisition of this portfolio in 2021, the value has grown by 323 million pula, which is a 29% growth over that 3.5 year period where we've held these assets, which obviously contributes materially to shareholder value. Next slide. So yeah, we continue to maintain a well-diversified portfolio by sector. This allows the group exposure to sectors with growth potential while containing the risk. We've increased slightly our exposure to the hospitality sector. This is a trend which is expected to continue as we seek leisure assets in unique locations. And I think through this strategic diversification, the group has mitigated the risks pertaining to specific market, macroeconomic variables, and economic downturns. And then the last slide of mine speaks to the vacancy analysis. And I think in here, what's evident is by leveraging our in-house letting expertise, we've been able to reduce our overall vacancy in revenue terms from 7% in 2024 to the current 5.2%. Certainly the highest vacancy remains in Gauteng, but with some 26,500 meters of new and renewed leases in that region concluded over the last 6 months, there are really early signs of growth in demand there. The KZN vacancy should be contextualized. That region accounts for less than 5% of our total revenue and is set to reduce even further with the sale of one of our 3 assets in Durban. Croatia, as mentioned, contributes 18% of our revenue and maintains its 0 vacancy. And then the Western Cape, clearly a massive reduction in vacancy by revenue there. It continues to outperform the market. The vacancy by revenue of 1.9%. I think that is for the most part due to the kick-in of the TELUS digital lease, which is TELUS is a subsidiary of the New York Stock Exchange listed BPO business TELUS. And they took occupation of 11,500 squares at our Voortrekker property as previously reported. This is on a 10-year lease. So all in all, those indicators are trending positively as we continue to work to lease out our properties at market and above rentals and add value in that way. Thank you.
All right. Guido?
I thought, yeah, well, Jacopo, this is your field. I think you.
All right. Okay. Thank you very much. As you have heard, the strategy is starting to pay out. It takes some guts, pardon my English, to embark in such a long-term vision and strategy initiated in 2015 of changing, our exposure by geography. And it's very nice and pleasant to see that what we saw is now coming to fruition. To achieve all of that, beside the vision of our leaders and the board, clearly, we need a team, and we have gone through quite a substantial reorganization of our group as managers, and we are now focusing in all the key areas. The scale that we have achieved allow us to have dedicated COOs in each and every of the boxes that you see. And because each and every of these boxes contribute to our vision to grow the shareholder value and are underpinned by the 4 objectives. It has been nice to see the new directors engaging with our team, which came from all over the world, from Croatia, South Africa, here in Gaborone. And this has been discussed at length and all the heads have been introduced. I believe a lot in teamwork. I believe in organization, data, and numbers in general. And I think that on the back of very good results, solid results, core results, I think now we are set for another journey together with very clearly set objectives and with backed by confidence in the numbers. To the next slide. I'd like to talk a little bit on, give you a little bit of figures because these are what our analysts always ask for. So we have generated 218 million worth of sales. One additional 5 million will come post-event. And we still have 12 inventory units to be sold on a market where demand is very high, especially in the upper end of the band of properties. So the point here is not only to reduce LTV, which is at the end of the day a metric, and I believe that we are more than safe where we are. But the ultimate scope is to rebalance the portfolio and start to zeroing in now that we have all our fundamentals right for the growth. So on the next slide, I'll touch a little bit with the help of my colleagues on what's going on. Chobe Marina Lodge, which is very close to the heart of all Botswana and the community of Kasane, a large employer in Kasane, and clearly to the heart of management and the funders, is going on. And we have successfully managed the claim. We are on site, and we're planning to reopen with a bold statement, architectural and operationally wise, by June next year. To achieve all of this, it's nice to talk about ESG. And Gary, thank you very much for showcasing all our success. It hasn't been easy. The reality is that the world is accelerating, and to be always, on the edge of what's going on, we need to commit. And our investment in PropTech, in that small investment, 7.5 million in Redimension, a PropTech fund, has availed us the opportunity, secured us a seat on the advisory board. So it will allow us to really be there and see opportunities and test opportunity and see how they can work for our properties. For instance, one of the PropTech companies within the fund is a plate recognition tool, PropTech tool, which is highly effective, and it's very used in our own properties. We will be continuing focusing on getting new opportunities. The reality is that these 3 years have been more of a consolidation and setting the base. So we are now looking actively, after having reset the goals, in expanding in Croatia and in the US, where we have been present, and we're looking for a mix of maybe development and long-term investment in a very liquid market. But the jewel of our strategy, I think, it's the move into leisure and hospitality with focus on lodges. And I'd like Let's Ramokate, who's championing this effort, to unmute himself and give us a little bit of a story.
Oh,
Thanks.
story. Thank you, Mr. Barry. I'm not going to give you any great details, but I'll give a bit of color just to show where the strategy is taking us. Basically, what we're trying to do is to add to our portfolio of hospitality assets by acquiring assets or partnering with communities in the 2 specific areas of Madikwe in South Africa and the Okavango Delta in Botswana. We recently had a very interesting trip to the Okavango, where we trying to meet with communities, basically in the Okavango area. To be able to develop there, it is key to either have a site of your own, which we clearly do not have because we have developed that a while ago, or partner with communities. So partnering with communities, we believe, is a key for us going forward. We have identified a number of communities. Some of them already have rights in concessions. Some, they own whole concessions. And we're in discussions with them to come up with a working model where we could develop in their concessions. This links quite beautifully with our ESG strategy that Gary was referring to a little earlier. And it fits very nicely to our group purpose of enriching our stakeholders, and in particular the communities that we serve. So I don't want to go into any greater details than saying that, but yeah, we are looking very closely into those 2 areas, particularly the Okavango, which I'm directly involved. Thank you.
Let's to the next slide.
Well, then I'll jump in. Thanks, Let's, for talking about leisure. I have the pleasure to finish on a lighter note. which is the redevelopment of Chobe Marina Lodge. And you can see some really fresh out of the press, some new renderings of Chobe Marina Lodge new building. We started on site in September. The site was handed over September to the contractor. The development part of the team of Jacopo is actually coordinating that in a very tight manner. Hopefully, the lodge will be finished in for July next year. And you can see that the building is a totally new rebuild, and the feel of it is a very much of a new, earthy, contemporary feel. I draw your attention essentially to this, to the new counter and to this very particular roof structure, which is a wavy roof structure with structures in steel that will hold the thatch roof, which is eco thatch, and that will give us the opportunity to work on a new, completely new look of the lodge. You will have, well, I think. Yeah, and the other thing that is interesting to note is that there was no mention about the insurance claim, and thanks to the team, we're told that we've settled some significant payment with the insurance and the business interruption claim too. So this will allow us to minimize the cost actually going forward, and utilize bulk of the proceeds from insurance to rebuild the lodge. As you can see, the swimming pool has been moved to the river, so it's a complete new look. For those of you that have been at Chobe Marina Lodge, you wouldn't recognize the old building. You wouldn't make out the old structures. We are very excited as the trade is looking very positive, and we have a lot of bookings already for coming in. So the pressure is on delivering right now. And on this lighter note, I think we can now move to questions and answers. I'd like to suggest that if you have any question, you can please unmute yourself and introduce your organization and then please ask any questions. Team is here to respond. Lucia, I see no questions.
Yeah, maybe we can allow.
Good morning.
Yeah, I can see a question. So, Amantle, thank you very much.
Okay, good morning. I'm Amantle from Bunani.
Good morning.
Congratulations on your financials. I was just going to ask that you alluded to review of strategy with fund managers. I just wanted to ask what sustainable strategic outcomes have emerged from the meetings to help the organization remain resilient amid the current economic downturn?
Okay. You see, I can take this one and then allow all my colleagues to chip in and further elaborate. The reality is that we are exposed 25% to this economic downturn. The regions where we are operating are actually doing well. We are not a global player. We don't have a property in each and every town in South Africa, and Botswana, Croatia. We are niche players. And in the nodes where we do operate, we achieve height of book value when we sell our properties. And this to counter a little bit also of the bad press we had recently. So the strategic move to counter these downturns is to continue in differentiating. It's all about risk management. It's all about structures and procedures and making sure that we analyze correctly the consequences of each and every step we take. So giving you the instance of balancing growth and distribution. This entails the study of each and every opportunities for us. Some will give us growth. and will take a little bit of time, 3 to 5 years. For instance, a green development. Others, redevelopments, may take 1 to 2 years. Straight acquisition of operating lodges could give us value immediately. So I think that our continued stress on understanding the data, studying the data, is giving us a good hedge on, for instance, in hedging our forex, hedging our interest rates, making sure that we have all the instruments and all the networking and all the relationship to refinance quite a substantial amount of money this year under the worst circumstances for a long period of time in Botswana. So in a nutshell, I think that the strategy has been there since 2015, is now bearing fruit, is now becoming apparent to all our shareholders, investors, and stakeholders, and we will continue it by being prudent in the capital allocation, moving to logistics. These are small tickets, 50 to 100 million pula. These are not huge investments. These are investments that can hit the ground running 6 to 9 months to refurbish and work. So this is, I think, what set us aside. Having the scale, having the exposure, and having a number of markets and not all our eggs in one single basket. Being rooted in Botswana and using Botswana as a springboard has proven to be a very good strategy, and I don't see any signs of fatigue in this strategy. I hope I've answered.
Thanks, Jacopo. Amantle, are you happy with that?
Yes, I am. Thank you so much.
Okay. Thank you for the compliments on the results. I see there's a question on the chat from Cabello. The question is, good morning. Is RDC likely to launch another bid for prime time in the future? I guess the answer is fairly clear, no. It is clear that the market, the shareholders have not wanted to support what we thought was the best option for the shareholders of prime time. And particularly, I guess the fact there is a very large concentration of shareholders in BPOPF and in some of the fund managers. It was quite clear that reducing the number of listed vehicles or completely independent listed vehicles, having one controlling another, was not really something that the institutional investors would support. And we clearly, if you hear our strategies to try to invest as much as we can outside of the country in these circumstances, and fundamentally the portfolio of prime time is mainly South African, Botswana based. So I don't think it's in our strategy for sure. I've responded to that question. Any other question? I do not see any other question, unless no one is. I would like to thank our directors for having participated to the meeting again, to all the team that participated to this result presentation, and I wish you a happy end of the year, a busy year with a lot of festivities. Enjoy your festivities, and we look forward to another presentation in the next 6 months. Thank you, everybody, for participating.
Thank you.
Thank you, Guido. Thank you all.
Thank you.
Pleasure.
Thank you.
Thank you.
Goodbye.
Thank you,
Goodbye.
Guido. Bye.
Goodbye. Thank you.